What's up, guys? This is Manoj Baptani. I welcome you all on behalf of the Edupedia world. I'm sure that you guys must be enjoying your life thoroughly to the fullest, and certainly you guys are currently in the best of your health and spirit. So, guys, our theory concepts relating to the topic of leasing decisions have already been completed in my last two videos. This is the third video presentation for leasing decisions, wherein I am going to discuss with you the kind of questions which have already been asked in the CA final examinations in the previous attempts. So, are we guys all set? Are we guys thorough with the kind of theoretical concepts which I've already told and made you understand in my earlier videos? I'm sure you guys must have given due time to your revision. Remember, guys, revision is the key to sail through your C final examinations. So, with that kind of belief, hope, and confidence on you guys, let's mark the beginning of this wonderful presentation with the first question of the day, and that will be this. This question was asked in CA final examination for June 2009. It says Messrs. Gamma and Company is planning of installing a power saving machine and are considering buying or leasing alternative. The machine is subject to straight line method of depreciation. Gamma and Company can raise debt at 14% payable in 5 equal annual installments of rupees 1,78,858 rupees each at the beginning of each year. In case of leasing, the company would be required to pay an annual year-end rent of 25% of the cost of machine for next 5 years. Secondly, it says the company is in the 40% tax rate bracket. The salvage value, which is estimated to be rupees 24,998 at the end of year 5. Evaluate the two alternatives and advise the company by considering after tax cost of debt concept under both the alternatives. Present value factors for the next 5 years have already been provided to us in the question itself. So guys, question is clear? Good. Let's dig in deeper in order to understand what this question is expecting us to do in the paper. Guys, this question is basically about the two alternatives. One, either you can get the machine by raising debt, that is the borrowing option, or you can go in for leasing option. If in case the company wishes to go for borrowing option, then it says that the company can raise a debt 14% interest rate which is payable in 5 equal annual installments of rupees 1,78,858 each at the beginning of the year. Remember guys, it's not saying at the end of the year. You need to pay the installment at the beginning of the year. Remember that is going to be very useful for you as an information to be kept in mind while you'll be solving the same in your questions. It is at the beginning of the year. And the second alternative it says is about leasing. If in case the company wishes to go about and take the initiative with leasing option, then it has to pay 25% of the cost of machine for the next 5 years at year end. Here it's going to be year end. In case of borrowing option, it's going to be beginning of the year. Apart from this, the thing which is being told in the question itself is that the company is in the 40% tax rate bracket and the salvage value which will be available only in case of borrowing option. Had it been the case the company wishes to go for borrowing option, then the salvage value which will be available at the end of 5 years would be 24,998 rupees. Now, we need to figure it out which option will be cheaper for the company and the same would be opted out. So this is what we are supposed to do in this particular question. I hope the entire question is pretty much clear to all of you guys. Shall we proceed further? Cool. Let's head towards the solution part, guys. Calculation of the cost of machine. I have prepared this table, guys, in order to ensure that you guys get the conceptual clarity in the utmost great sense. So I have always recommended this thing in each of my video presentation that always and always go for tabular presentation. It saves your time and secondly, it looks very neat and tidy. The person who has to check your paper will not have to go into a bit of the detail in order to scratch away and check whether you have actually written the right answer or not. It will be clearly mentioned by your neat and tidy presentation itself, and that will be more than sufficient for him or her to understand what do you really want to offer them up as your answer. So always and always go for tabular kind of presentation. It is very helpful, guys. So this is the first tabular presentation that I wanted to offer to you guys, which is calculation of the cost of machine. Remember, guys, in this particular question, nowhere we have been told what is really the cost of machine. The only thing which has been provided to us is the installment amount. The installment amount is 1,78,858 rupees. With the help of this particular stuff and with the help of interest rate which has been told to us, that is 14% payable annually, we will be able to draw out and figure out what will be the cost of machine. And this is the way to check it out. Number one, if you can see the first column, it says years. We'll be drawing it out in a reverse sense, as in the descending option, 5, 4, 3, 2, 1. The next column will be closing balance at the beginning. Then comes installment amount, and then interest, and then finally principal component. Okay, so guys, in the fifth year, okay, since I have told you this thing to mark in your mind that the installment amount needs to be paid in the beginning. Remember, guys. So if I talk about year 5, what will be the closing balance at the beginning of it? It has to be zero. Why? Because in the beginning itself, that first day, you'll be paying it out installment amount of 1,78,858 rupees to them. So what amount of closing balance will remain? Zero. You have already paid the installment in the beginning of fifth year itself. So for the entire fifth year, the closing balance at the beginning will remain zero. Next column comes in installment. What amount of installment do we need to pay? We need to pay 1,78,858 rupees as installment. Now, coming to the same part, it has been mentioned in the question that this particular installment amount includes your interest amount as well. So, if in case this installment amount includes 14% interest, what quantity does it occupy? It will occupy what 1.14. That means one component of principal amount and 0.14 component of interest. So the installment amount of 1,78,858 rupees, if the same is being divided by 1.14, you will get the amount of principal, which will be 1,56,893 in the case of year 5. The remaining amount, that is 21,965, which we can obtain the same after subtracting the same amount of principal which we obtained from the installment amount. We can get the interest amount, which will come out to be 21,965 rupees. This will be the interest amount for fifth year. Now, coming to the second part, if I'll talk about the closing balance at the beginning. So what was the principal component of fifth year, which is 1,56,893 rupees? That will be the closing balance at the beginning for fourth year. So it will come directly from the top right side to the second best left hand side of the closing balance at the beginning, which will be 1,56,893 rupees. Now again, since we have already been told that the installment amount of all the 5 years is going to be 1,78,858 rupees, this is going to be no exception for fourth year as well. So we will be having the same installment of 1,78,858 rupees for fourth year. Now, since we know that the closing balance at the beginning for fourth year is 1,56,893 rupees, and the same amount of 1,56,893 will be again divided by 1.14. Why? Because 1,56,893 also includes the amount of interest, which is 0.14. So we will come to a figure which is 1,37,625, which is the principal component. If the principal component for fourth year is 1,37,625, then in that particular case, if in case I've already paid an installment of 178,858, so the remaining amount will be 41,233, which is gonna be the interest for fourth year. Similar exercise has to be repeated for third year, second year, and first year. So the closing balance at the beginning for third year will now be the principal component of fifth year and the principal component of fourth year. Principal component of fifth year was 1,56,893. Into the same amount, we'll add 1,37,625, which is the principal component of fourth year, and we'll get the closing balance at the beginning for third year, which will come out to be 2,94,518 rupees. Now, since the installment amount is going to be the same, which is 1,78,858. Again, we'll get the principal component. Principal component for fourth year was 1,37,625. It includes the amount of principal as well as interest. Again, the same will be like divided by 1.14. Similar exercise has to be repeated, and you'll get the principal amount component for third year as 1,20,724 rupees. The remaining balance, if I'll deduct the same from the installment amount, I'll get an interest of 58,134 rupees. And repetitively, again, the same exercise needs to be repeated for second year and then first year. Then, what do we observe? After calculating the principal component which we drew from year 5, year 4, year 3, year 2, and year 1, lastly, the total cost of the machine will come out to be 6,99,988 rupees. There is a catch in this particular stuff, guys. Remember this. In the year 1, since I told you that the installment amount is being paid in the beginning of the year itself. So, in year 1, if I'll talk about in the first installment, what will be the interest component? It has to be zero. Why? Because I've already paid the installment in the beginning of the year itself. So as and when I obtained and acquired that asset, I made the first installment. So what amount of interest was included in it? Nothing. Zero. So the first installment that I'll be paying will be entirely including only and only principal component. Have a look at year 1. It says the closing balance at the beginning will come out to be after adding a total principal component of year 5, 4, 3, 2 as 55,21,140 rupees. And the installment amount would be again 1,78,858. Here is the catch, interest will be zero. So the entire principal component will be of installment amount, which comes out to be 1,78,858. So the total cost of the machine will become we'll get to we can get the figure by adding the principal component of all these 5 years, which will come out to be 6,99,998 rupees. That will be the cost of machine. Now, guys, this is part one of this question. Basically, it was essential for us to note what is the cost of the machine in order to go further. Now, let's move ahead with the continuing part. What if we go for the first option, that is the buying option? If in case I go for buying option, I need to first calculate the depreciation. Depreciation that will be charged for the entire year. Cost of the machine comes out to be 6,99,998 rupees. Out of the same, I'll deduct my salvage value. Salvage value was none other than 24,998 rupees. That same thing has been mentioned and given to us in the question itself. I'll have to deduct this salvage value out of my cost in order to come to a conclusion wherein I can find the depreciation per annum. Number of years is 5. I'll divide the figure which I'll obtain in as 6,75,000 out of divide by 5. I'll get a figure of rupees 1,35,000. So the depreciation which needs to be charged per year per annum comes out to be 1,35,000. It has been told to us that the depreciation has been charged in the question on SLM basis, which is straight line basis. So it has to remain equal for all the 5 years. Now, coming to the tabular presentation, guys, year 1, year 2, year 3, year 4, and year 5. Then comes the second column, which is interest. Then comes the third column, which is depreciation. Then comes the total expense, that is interest and depreciation. And what amount of tax saving were we able to make out of it? Guys, the year 1 interest we already calculated in my last slide, which was 72,960 rupees for year 1. Remember, guys, since I am already making the payment in the initial phase of year itself, at the beginning of the year, this 72,960 rupees is not for year 2. It is basically for year 1. However, that will not include the first installment amount. The first installment will not be included because it was solely and solely made on principal component basis. So all we have to take care is our interest on the remaining installments. So the 72,960 rupees will constitute for the next 4 installments that they made. Coming back to this table, the first interest is 72,960 rupees. We'll add depreciation to it, which is 1,35,000 for each year. We'll get a total expense for year 1 as 2,07,960 rupees. Now, this is the amount of expense that we incurred during that particular year. Now, since interest and depreciation, both of them are tax deductible expenditures, this will help us in getting the benefit of tax saving. So, the tax rate which has been mentioned is 40%. This company is under 40% tax rate bracket. So, I'll simply multiply 2,07,960 rupees with 40% and I'll get a tax saving of 83,184 rupees in year 1. Similar exercise has to be repeated for the next 4 years. For year 2, the interest amount has been like calculated in the last slide, which was 58,134. I'll add the depreciation to it. I'll get a total figure of 1,93,134 rupees. If in case I need to obtain the amount for tax saving, I'll simply multiply it with 40%. I'll get a figure of 77,254 rupees. Again, in year 3, year 4, and in year 5, I'll get a total tax saving of 70,493 in year 3, 62,786 in year 4, and 54,000 in year 5. Remember guys, in the last year, since I already made the payment in the first initial beginning of the year itself, the interest amount would have been zero. That was only including basically the installment amount. So, which is principal. So, in case of fifth year, I'll get the tax saving benefit only on the depreciation part. That is 1,35,000. I'll get a tax saving of 40%. I'll get a tax saving of total 54,000 in this particular case. This is the amount of tax saving for the next 5 years if in case I go for borrowing option. Now, coming to the major aspect of counting in whether I should go for borrowing or not, which will be present value of the outflow. What amount of cash outflow is being made out of my pocket if in case I go for a borrowing option. Now, this is the tabular presentation again based on the similar lines of my last slide, which is year, installment, tax saving, net outflow, present value at the percentage of 8.4, and what is actually the amount which comes out to be after multiplying the same with net outflow. So these are my 6 columns wherein I have already completed my tabular presentation. Year 1, year 2, year 3, year 4, year 5, and also there is year 0. Why? Because I need to make you understand here itself the importance of tax saving aspect. So year 0 will come out to be the installment amount, which is 1,78,858 rupees. Remember guys, in year 0 there will be no tax saving. Why? Because you are not paying any tax. You are already making the installment in the first day itself. So what amount actually you did took as some kind of loan? You did took nothing. You already paid the installment amount at the first day itself. So did you get to pay any kind of interest in it? Absolutely not. Zero. So the tax saving on term of interest will be zero. Plus, also you need to understand that the depreciation is taking place for the entire year. And since you have already made the installment in the first day itself, so can you take out the benefit of depreciation into it? Absolutely not. Again, the tax saving on part of depreciation will also be zero. So the total tax saving for year 0 will be zero. So what did you pay as your net outflow? You actually pay 1,78,858 rupees as your tax outflow. The same has to be multiplied with the present value at the rate of 8.4%. And since you are already making the payment in the first day itself, the present value factor will remain as 1. So what amount did you pay actually as your present value will come out to be 1,78,858 itself, which is the installment amount. This is something which is with relation to year 0. Now coming to year 1. Since you paid the installment of 1,78,858 rupees, out of the same, in my last slide, I've already shown this thing that the tax saving for year 1 will be 83,184. The same has to be mentioned here in this table. And if in case I am already making a tax saving of 83,184 out of the installment amount of 1,78,858, so what is actually my net outflow? This is nothing but the remaining out of it, which is 95,674 rupees. The same has to be multiplied with 0.9225, which is the present value interest rate factor at the percentage of 8.4%, which comes out to be 0.9225. I'll multiply the same with 95,674 rupees as my outflow. I'll get a present value amount in as 88,259 for year 1. Coming to second year, again the installment amount remains the same, and the tax saving amount which was already obtained in the last slide comes out to be 77,254 rupees for year 2. That has to be mentioned here in this particular slide. It comes out to be final net outflow in as 1,01,604 rupees. The same needs to be multiplied with the present value interest rate factor for second year at the percentage of 8.4, which comes out to be 0.8510. I'll get the present value outflow in as 86,465. The similar exercise needs to be repeated for third year and fourth year. Coming to the fifth year, guys, fifth year tax saving would be 54,000 rupees. This has been like mentioned here itself. The interest was zero. Depreciation, you got 1,35,000. You actually were able to bring out the tax saving of 40%, which is 54,000 rupees. So, did you pay the installment in the fifth year? Nope. You were already done with your installments in year 4 itself. Year 0, year 1, year 2, year 3, and year 4. So, what amount did you actually shed for fifth year? Complete fifth year, nothing. You already paid the installment in the beginning of first year, fifth year itself. So what is your net outflow? In this particular case, since you are already taking up the tax saving of 54,000, the net outflow will be negative 54,000. The same has to be multiplied by the present value factor for 8.4%. For fifth year, it comes out to be 0.6681. After getting the present value of fifth year, which is negative 36,077, you will get the total present value of outflow, which comes out to be 4,86,641 rupees. Now, don't forget, guys, we need to consider salvage value as well. Why? Because this is a borrowing option. So you will also get the benefit of salvage value, which is 24,998 rupees. That will be multiplied by the present value interest rate factor at the rate of 8.4% for fifth year, which comes out to be 0.6681. So what is the present value of that fifth year salvage value? It comes out to be today as 16,701. I subtract the same out of my present value of total entire outflow. Why? Because this is my benefit. So what should be my actual present value of outflow? It comes out to be 4,69,940 rupees if in case I go for borrowing option. Guys, here the borrowing option amount is seized, that is freeze. We are not supposed to go any further with respect to borrowing option. So remember the present value of outflow, if in case we go for borrowing option, it comes out to be 4,69,940 rupees. Now, coming to the second part, what if we would have gone for leasing option? What would have happened? Lease rent, which has been told to us in the question itself, it comes out to be 25% for the cost of machine, okay, for the entire 5 years down the line. 25% of 6,99,998 rupees, it comes out to be 1,75,000 for each year. Now, we need to pay this lease rental of 1,75,000 for the next 5 years, and my tax saving is nothing here but my lease rentals. Lease rental, the payment which we are making as lease rental, it is a tax deductible expenditure. So I'll simply multiply it with 40%. I'll get a tax saving of 70,000 rupees. So what is my actual net outflow in this particular case? It has to be 1,75,000 minus 70,000, which comes out to be 1,05,000. I'll simply multiply the same with the present value interest rate annuity factor of 8.4% for the next 5 years. The total sum up will come out to be as 3.9509. I'll multiply the same with 1,05,000. I'll get a figure of present value in as 4,14,844.50. Now, this is what has to be the present value outflow if in case I go for a leasing option. Now guys, remember, present value outflow in the borrowing option would have been 4,69,000 approximately. Here, it's 4,14,000 approximately. So, which way should we go? Obviously, the one wherein we are supposed to pay lower amount of money. We are supposed to shed lower bucks. So certainly the company would go in for an option of leasing option. The company is advised to opt for leasing as the total present value of the cash outflow is lower by 55,000 approximately. Guys, this was the question which was asked in CA final examination for June 2009, Gamma Limited and Company. I hope each and every aspect which I told you up here itself is utmost clear to you guys. And remember guys, presentation should be always be like neat and tidy. It has to be in tabular presentation that will attract the person who is actually checking your paper in such a way wherein they won't find any kind of reason to deduct your marks. I know it's difficult to ensure preparation of the tabular presentation, but it is always handy, guys. Believe on this particular stuff. I am sure you guys got the complete clarity with respect of this particular question. Are you guys all set to enter the zone of the second one? Absolutely. Let's go ahead with the second question. So guys, next question. This again has been like asked in CA final examination. XYZ Limited requires an equipment costing 10 lakh rupees. The same will be utilized over a period of 5 years. It has two financing options in this regard. Number one, they can arrange a loan of 10 lakh rupees at an interest rate of 13% per annum, the loan being repayable in 5 equal year end installments. Guys, now this is the catch, year end installments. The equipment can be sold at the end of fifth year as rupees 1 lakh. Salvage value comes out to be 1 lakh rupees after the year end of fifth. Second option is leasing the equipment. Leasing the equipment for a period of 5 years at an early rental of 3,30,000 payable at year end. Apart from this, the rate of depreciation has been provided to us in the question itself, which comes out to be 15% on WDV basis. Now, no more SLM. WDV is a bit more advanced one, is something wherein we need to calculate it more carefully, guys. Rate of depreciation 15% on WDV basis. The income tax rate is 35%. The discount rate is 12%. Advise which of the following options should XYZ Limited exercise and why. So guys, we need to take care of this thing again in the same similar kind of fashion. Borrowing option or leasing option, which one is better? Depreciation 15% WDV basis, income tax rate 35%, discount rate is 12%, leasing rental would be 3,30,000 for 5 years, or if in case we go for borrowing option, we need to pay 5 equal year end installments and the interest rate needs to be 13%, guys. So this is the question which has been like asked in one of the C final examination. Are we all set to move ahead and carefully clear out the solution itself? Yes, we are. So guys, if in case we go in for option A, which is nothing but borrowing, if the loan has been like borrowed from one of the banks, what will be the kind of annual payment do we need to pay in this particular case? Since it has been told to us in the question itself that if in case we resort to borrowing, we need to pay an interest at a rate of 13% of the loan amount, then we just need to calculate one thing, guys, and which is the present value annuity factor at the rate of 13% for the next 5 years. So this will come out to be, if in case we sum up the entire 5 years 13% present value annuity factor, it comes out to be 3.5172. You don't have to do anything, just sort it down. Annual payment that you need to make would come out to be in this particular case as 10 lakh rupees for the cost of equipment. I'll divide the same with the present value annuity factor at 13% for the next 5 years. It will come out to be 3.5172. So what should be my annual payment? It has to be 2,84,320 rupees rounding off. Guys, this is the amount of annual payment that we need to pay. Next comes the schedule of my debt repayment. What amount do we need to shed? What will be my the complete principal amount? We will be calculating the same in this particular tabular presentation. It comes out with five major columns. Number one, end of year. Number two, total payment that you are making. Number three, interest amount out of the same. Number four, principal amount out of that total payment. And number five, principal amount which will be outstanding once you are done with that particular year. These are the five different columns. Number one, end of year, 1, 2, 3, 4, 5. Total payment that we need to pay each year has already been calculated, which comes out to be 2,84,320 rupees, guys. Now, this total payment includes the amount of interest as well as principal, both. Now, guys, since we have already been told to us that we are supposed to pay the interest rate at 13% of the cost of the machine. Cost of the machine in this particular question is 10 lakh rupees. If in case I need to get the interest amount at 13% of 10 lakh rupees, it comes out to be straight 1,30,000. 1,30,000 is my interest amount. If in case 1,30,000 is my interest amount out of the total payment of 2,84,320 rupees, the remaining is my principal, which comes out to be 1,54,320 rupees. Now, since I have already made the payment of 1,54,320 rupees out of the total cost of the asset, which comes out to be 10 lakh, the principal amount which will be outstanding at the end of year 1 will come out to be 10 lakh minus 1,54,320 rupees, which will be 8 lakh 45,680 rupees. Now, again, in the similar kind of fashion, what will be my interest amount for year 2? It has to be 8,45,680 rupees multiplied by 13%. Simple. My principal amount which is outstanding at the year 1 will be counted in for calculation for the interest of year 2. So that will come out to be 1,09,938 rupees as the interest for year 2. Since this is my interest amount, and out of the total payment which I am making for year 2, which comes out to be 2,84,320 rupees, again the remaining amount will be 1,74,382 rupees for year 2. Once you are already done with the principal amount of year 2, now the principal amount which will remain for end of year 2 will be the principal amount of year 1 minus the principal amount that you are paying in year 2. We'll get a figure of 6,71,298. How do we come to get to this figure? We just made in short that we are subtracting 1,74,382 rupees out of 8,45,680 rupees. I'll get a figure of 6,71,298, which is the principal amount outstanding for the year 2. Now, the similar exercise needs to be repeated for third year and fourth year. You'll get to know that in the fifth year, what's going to happen is I am left out with the principal amount of outstanding in as 2,65,806 at the end of year 4. This amount will be multiplied with 13%. I'll get a figure of 18,514 rupees as my interest. And since I'm already paying a total payment of 2,84,320 rupees for each year, the remaining will be the principal, which comes out to be 2,65,806. Once you have already made the payment of this 2,65,806 at the end of years 5, then the principal amount outstanding will remain and as 0. Guys, this is the entire debt repayment schedule for if in case you go in for a position of borrowing option. Next comes in what will be my cash outflow. We always begin with one particular thing in our mind that we need to consider which way to go and which way to drop. So my thing is to get you to the right place, which has to be the schedule of the cash outflows. What actual amount that you need to shed out of your pocket if in case you are considering for cash outflows. It has to be divided into majorly 8 columns. Number one, end of the year. Number two, debt payment. Number three, interest. Number four, depreciation. Number five, interest plus depreciation. And number six, tax shield. What is basically your tax saving out of it? And once you are already done with the tax saving, what amount of actual cash outflow do you actually need to pay? That is in column 6. Then comes present value factor at 12% interest. And finally, the present value annuity amount, which will come out to be in column number 8. So, are we all set? Perfect. Let's go ahead with this particular tabular presentation and understand it in a way better. Perfect. Guys, end of the year 1, 2, 3, 4, 5. Debt payment, we have already been sorted with this thing that it has to be 2,84,320 rupees for all the next 5 years. Interest amount, we have already computed all of them in my last debt repayment schedule, which comes out to be 1,30,000 for year 1, 1,09,938 for year 2, 87,269 for third year, 75,879 for fourth year, and 18,514 rupees for year 5. We have already mentioned the same here in this particular table. Apart from this, we have been told in the question itself that depreciation has to be charged at 15% but on WDV basis. So the depreciation amount for the first year will be nothing but 15% of 10 lakh, which comes out to be 1,50,000 rupees. Now guys, since I've already deducted 1,50,000 out of my 10 lakh, the remaining amount which needs to be calculated in depreciation for the next years will be taken care in as 10 lakh minus 1,50,000 depreciation for first year. It comes out to be 8,50,000. So the remaining amount has to be calculated now not on 10 lakh but on 8,50,000 rupees in order to calculate the depreciation on WDV basis. Then that amount will come out to be 15% of 8,50,000, which comes out to be 1,27,500. Again, this 1,27,500 will be deducted from 8,50,000. Then also again, the amount which will be remaining will be applied for the third year's depreciation, which will come out to be 1,08,375 for year 3, and accordingly for year 4 and 5, which comes out to be 92,120 rupees and 78,300 rupees for fifth year. This is about the depreciation. I've already mentioned and told you about interest. This is about depreciation. We need to add the total of both these tax deductible expenses, and it comes out to be 2,80,000 for year 1. If we'll be like adding interest amount and depreciation amount, 2,37,438 rupees for year 2, 1,95,644 rupees for year 3, 92,120 rupees for year 4, and 78,300 rupees for year 5. So herein you'll be getting all these kind of amounts of interest and depreciation. Once you have already done with all these 5 different numbers, you'll have to multiply it with 35%. The tax saving that you can get is on the basis of tax rate which is applicable to that particular company, which here is 35%. So once you'll be multiplying the interest plus depreciation to 35%, you'll get a figure of 98,000 for year 1, 83,103 for year 2, 68,475 for year 3, 58,800 for year 4, and 33,885 for year 5. So this is your tax saving. You made a debt payment of 2,84,320 rupees for all the 5 years. Here we just calculated the tax saving for the next 5 years. So in actual, what was the amount of cash flow? That is the amount which you had to shed from your pocket for the next 5 years. It will come out to be, in this particular case, you need to subtract the debt payment. You need to subtract the tax saving amount from your debt payment amount. That is, you need to subtract your column number 6 amount from the column number 2. You will get a figure of 1,86,320 rupees for year 1, 2,01,217 for year 2, 2,15,845 for year 3, 2,25,520 rupees for year 4, and 2,50,435 rupees for year 5. The same has to be multiplied with the respective year's present value factor at the rate of 12%, which comes out to be 0.893, 0.797, 0.712, 0.672, 0.636, and 0.567 for year 5. You'll get a total present value of outflow which you'll have to make for the next 5 years would be in totality 7,65,864 rupees. Out of the same, you'll deduct your present value of the salvage value, which comes out to be 5,67,000. That comes out to 56,700, not 5,67,000. How did I come across to this particular figure? Remember, guys, the present value, the salvage value was 1 lakh rupees, which we had told to us in the question itself. Since we will be selling this particular machine after a period of 5 years, the present value factor for the 5th year comes out to be 0.567. So I had multiplied this 0.567 to 1 lakh rupees. I've got a figure of 56,700 rupees, which will be the present value of the salvage value. So my total present value of the outflows after deducting the salvage value's present value will come out to be 7,09,164 rupees. This is the present value of the cash outflow if in case I resort to borrowing option. Now the question is not yet over, guys. What if I would have gone for the second option, which is leasing? The lease rent has been told to us in the question itself that it has to be 3,30,000 for the next 5 years down the line. What will be the tax shield? Interest amount which I am paying, the lease rentals, whichever thing I am paying to the person, this is a tax deductible expense. And since the taxation rate which is applicable to this company is 0.35, that is 35% of the rate, this will be counted in as the tax shield for that company, which comes out to be 1,15,500 rupees for each year. So my net outflow for each year would come out to be 2,14,500 rupees. I'll multiply the same with the present value interest rate annuity factor for the next 5 years at the percentage of 13. I'll get a figure of 3.605. The present value will come out to be 7,73,273 rupees. Now guys, remember the present value outflow, cash outflow for borrowing option comes out to be 7,09,000 approximately. Here it is 7,73,000. Which way to go? Obviously the one which shows you and which makes you shed lesser amount of money from your pocket. Since the present value of outflows is lower in the borrowing option, XYZ Limited should avail of the loan and purchase the equipment, and they should just not go for the leasing option. They should not go for it. Guys, these were the two prominent questions which were asked with relation to leasing decisions chapter in the previous CA final attempts. I hope you guys are clear with each and every kind of question that we discussed over here. Everything is sorted with you guys. If in case you found anything, some kind of misconfusion or maybe misunderstanding with kind of any element, and you want us to throw some more light in order to make you explain this thing in a better way, so certainly do write to us. If in case you have liked this video, do give us a thumbs up. Certainly this video would have been like knowledgeable for you guys, worth sharing. So do give us likes, do give us a thumbs up for it. Like, share and subscribe this video. Thank you on behalf of the Edupedia world. Keep interacting, guys. Your love is the utmost major thing which is required for us. It keeps us help in building our confidence and serve you in a better way. Stay connected. That will help us in understanding your needs way better, guys. I'll see you in the next presentation with a lot more questions which are waiting for you guys. So stay tuned to our channel and keep learning, keep revising, and keep motivating yourself to perform your best. I'll see you in the next presentation, guys. Till then, sayonara. God bless you all. Take care. Bye.